Call them change makers.
Call them rule breakers.
We call them redefiners. Hi, everyone, and welcome back to Redefiners. I'm Hoda Tahoon, a leadership advisor at Russell Reynolds Associates, and I'm here once again with my incredible podcast partner and co-host, Clarke Murphy.
Hey, Hoda. Great to be here again.
Clarke, we love to talk about disruption, transformation, and change a lot on this podcast. And one industry that has experienced this more than any other in terms of disruption and transformation is, of course, the banking and financial services industry.
Well, the irony of having two former bankers as podcast co-hosts, the CEO of a bank today, is deeply ironic. But the world of the consumer experience, the power of technology, the power of financial technology really has transformed banking and broader financial services. So this will be fascinating to talk about. Where did it come from? Where is it? And where is it going?
It's amazing as I sort of think about the time that I was in banking almost 20 years ago and how far the technology has come. It's made it easier to be underbanked and particularly accessing populations and geographies around the world that never had access to banking before. And things like mobile banking, digital payments. So very excited for today's conversation.
Yeah, I think it's to see those who skipped the bank and went straight to their phones in parts of Africa, other parts of the world, it changed not only the world, but then we see in New York City on Park Avenue, where I'm sitting right now, whether it's blockchain, data analytics, et cetera, this sense of transactions, this sense of uses of technology and acceleration. So we're pretty excited for the discussion today.
Absolutely. So Clarke, who is our guest today?
We're fortunate to have Charlie Scharf here, who's the president and CEO of Wells Fargo. As you probably know, it's the third largest bank in the U.S. with almost $2 trillion in assets. Charlie's a financial services veteran, a great friend. And prior to Wells, he was chairman and CEO of Bank of New York Mellon. Before that, CEO of Visa. And Charlie is also a board director of Microsoft and a member of the Business Council.
Charlie, welcome to Redefiners.
Thank you. It's great to be here.
We're so excited to have you on the podcast today. You've been in the banking industry for over 25 years now. What initially attracted you to the industry and what makes you stay?
It's an interesting question because I initially started down a very different path. When I went to college, I was actually very interested in science and really wanted to be a research chemist. And that lasted.
Really?
Yeah, absolutely. And I was good in science. I loved chemistry and biology when I was in high school. And so that's the path that I went down. And literally for the first year and a half, that's what I studied in school. And I came to realize that I actually didn't want to spend my life in a laboratory, that I actually wanted to be more engaged with people. I wanted to be part of building something, building an organization, something that was far more interactive than just someone sitting in a lab doing research consistently. My dad was a financial advisor. My brother, who's older than I, had gone to business school and then had started working at a bank.
So this is in the family.
Exactly. It was in the family. And I had also had a bunch of summer jobs starting when I was 13 years old in financial services.
What were you doing at 13 years old in financial services industry?
So I grew up, in a family. It was about work and education. We were very close as a family, and it was, you should work. And so I literally started when I was 13 working in the back office of the firm that my dad was working for. And I did that every summer up until, even through college, up until I wound up getting a full-time job, doing very different jobs at different places. But that's what we did. That's what my brother did. That's what I did.
Charlie, at the same time, you worked with some of the legends of financial services with Jamie, Sandy Weill, Bob Lipp, starting at commercial credit. It eventually ends up Citi. How did that shape you to who you are today?
I mean, it was an extraordinary opportunity, and it totally shaped the opportunities that I then had, but also the way I think about leadership today. It just, by way of background, it was a very small company that I joined called Commercial Credit, total of 3,000 people. Sandy Weill was CEO, Jamie was CFO, Bob Lipp was running the consumer businesses. They had just taken it public. And I joined the company really because my dad had been a broker at Sandy's firm for many years and said, I know you're thinking about doing all these things in New York at these bigger financial services companies, but these guys are going to make something of this little thing. You really should think about this. So through a whole bunch of different ways, my resume got to Jamie, he hired me. And it was an extraordinary experience because I got to see these very talented, very experienced people up close in terms of how they ran the company and how they built the company. I was able to grow as the company grew. And that, as Clarke, you said, that company started from a little nothing company that lost $100 million to eventually doing a merger of equals with Citi and becoming Citigroup. What I saw was, I think one of the things that just sticks in my mind in terms of leadership is the company was run with a clear leader in Sandy. He was the leader. He put the management team together, but it was a partnership. He wanted to run it like a partnership.
So ironic that so many of young people today want to go to the big bank or the big investment bank for the experiences. You went to, on a relative basis, a quite small place that happened to have come very big. What's your advice to younger people entering financial services about bigger versus smaller?
So what I tell people is you really do have to be comfortable with who you're going to work for and who are both the individuals, but it is the institution as well. And you have to find a place where you're going to, where you believe that they genuinely care about you, they care about your future, they care about your career, and that if you work hard and you perform, you'll be recognized by that. And unfortunately, that's not always the case at a lot of places. I had a very broad experience. Because it was a very small company, I learned finance, I learned marketing, I learned operations, very much through a financial lens, but I got exposure to many things. And I think the reality is very few people come out of college and really know exactly what they want to do. My advice is do something where you do get an opportunity to get exposure to more than just one thing, because you've got a long career, you've got plenty of time to zero in on exactly what you want to do.
Do you, Charlie, when you look at the Citi moments as it became through to CEO of Wells, is there a redefining moment for you or defining moment for you in your career?
Let me just answer that two ways. I think I actually didn't do my job along the way thinking I want to be a CEO. And so therefore, what do I have to do to become a CEO? I had my head down doing the roles that I had. I was very lucky, which is in that as I performed and as I showed I had the ability, the people I worked with, whether it was Jamie or Bob Lipp, who was a real mentor to me along the way, was always very helpful in making sure that I got an opportunity beyond what most other people would have gotten at a large company. So they took that shot on me. And so as I just think about what I can do for people here, that always sticks in my mind. But I had my head down thinking, hey, I want to be successful. I want to do well. And if I do that, good things will come to me. Having said that, I did get to a point at JP Morgan Chase where I was running the retail financial services business, which was all the consumer businesses except card. And I'd done it for about 9 or 10 years. And you think about what you want to do and what you can do next. And at that point, you do have to really take accountability for yourself. And you don't want to get stale. You don't want to be the person that stays in the role too long. And so Jamie and I had a very open conversation, probably over a course of a year, which is, I want to do something different. I'm not sure that there's anything here for me. It might be someplace else. And he helped counsel me and be part of that conversation, which people think is awfully weird, that the person you're working for is part of the conversation about whether you should stay, whether you should go do something different. But again, I was lucky enough that I was working for someone who genuinely cared about me and was part of that thought process. And you get to a point where the aha was like, it's time to go. It's time, as much as I love the company, and obviously the company continues to go on and do great things, and I loved the person I was working with, it was time to strike out on your own and, for me, take advantage of an opportunity that came up at Visa to run the place.
I couldn't agree more. Having led our firm, Russell Reynolds Associates, the most productive conversations about big leaders and big producers or emerging leaders was those that were open and saying, well, here's what you could do. It's a big world. I'll help you if you help me in the transition, or I'll help you and you should stay here because you don't need to transition. But I would say to our listeners, those conversations with mature executives can be defining moments, and not to be afraid of them. I agree 100%.
Yeah, and I think it goes into this whole point around exceptional leadership, which you were also sort of referring to a few moments ago, Charlie. As you think about the leadership qualities that you've learned from and obviously have been a part of from your own leadership standpoint, you took over as CEO at Wells Fargo at a very challenging time in 2019. The bank was dealing with a fallout from a scandal, customer trust was very low. What were some of the first things that you did to restore confidence in the company, the customers, and stakeholders as you sort of reflect on leadership?
And so it's interesting. We think about, what I find when I talk to people internally is sometimes people get confused between really good management and leadership, right? Those two things are very different. And as you become more senior, you really can't be just a great manager without becoming a very strong leader. So to me, the first thing I did was made it very clear to people. First of all, I've got a huge amount of respect for what was built before me. You can't just point out the problems and talk about all the things that have to change. You have to win people's hearts and minds. And to make people fully understand that you know what they've done that's done so well, you have to know what they've built. And then you transition to, okay, but having said that, we're not where we need to be.
And Charlie, as you think about the moment that you took over versus where you are today, what are some of the things that stand out the most in terms of biggest learnings?
From my perspective, I always have thought that whatever you think, until you're inside an institution, you can do all the work that you want. You can study, you can read all the public information, you can talk to people. Until you don't really know a place until you get inside. You don't know the people, you don't know the issues. And so the reality is, I tried to come in eyes opened. The strengths were incredibly strong, and the problems were deeper than I thought they were. They were the same problems, but I was surprised that we hadn't made more progress, that we weren't further along, that we didn't have enough people that were really the most qualified to get this work done, that we hadn't been as clear with each other that nothing was more important than this.
I remember, Charlie, when you joined, we chatted and you said, listen, we have a couple of years of foundational work to do and we're all committed. And then when we finish that period, we then move forward into the other things that we can do. And you see now, both the investment bank and the consumer bank, at least it reads like you're in that mode of growth and innovation and forward transformation. Does it feel different?
It does feel different with a but, which is the issues that we're dealing with are, some of them are very tactical, right? But what's also really important is we actually finish every last piece of work, because we've seen some financial institutions do 80% or 90%. And if that's as far as you get, it's just a matter of time until you fall backwards. And the second is, it's got to be institutionalized. It's got to become part of the culture of the company. So I try and be very careful when I talk about where we are to strike the right balance between, we've made huge progress. We are ticking off the individual pieces of work that have to get done, but we're not declaring victory. That this is a long-term journey to change a culture takes a long time. And there are great parts of our culture, which I wouldn't want to change, that have taken decades to build. But we now need to add this element to it. And we've got to continue the focus on that.
So you've been in transformation at each institution. The fact of contactless payments and Visa or credit cards, you couldn't have imagined a decade ago. And now the payments industry has been one of the hot businesses there are. At Wells, you are keeping some things, and there's this problem, and we've seen banks not succeed, is the willingness to take risk for new things or new products or new services, but yet maintaining the culture, the commitment of the people that you talk about. As a CEO, how do you find the balance of push, but keep at the same time versus keep and then you lose market share?
Yeah, listen, so first of all, I think we talk about it all the time. We talk about the fact that in any business you're in, you have to evolve, you have to change. And I've had different opportunities when I showed up at Visa as the CEO, the company was performing extraordinarily well. It had gone public 4 years earlier, and the stock was, I don't know, double or triple what it was at the time of the IPO, as the world's leader. But you're in a payments industry, which is changing dramatically. And so you have to walk in and convince people that have done an amazing job, that are the leaders in the industry, and say, status quo will only last for so long. And then I show up at a place like this, which is, okay, we've moved too slowly on some things. and we're a little too comfortable in how we've operated, and we do need to evolve. We do need to change. And so we have to be willing to understand what is the future going to look like and be as aggressive as we can, because we're going to be left behind otherwise.
So as we think about disruption a little bit more broadly, and a lot of the fintech companies that play in the space around payments, and Apple Pay has obviously come in addition to PayPal, but there's a lot of other VC-backed companies like Stripe and Chime and Ant Group out of China, just to name a few. How do you think about those fintech companies and how it interplays with the banking space?
You can't paint them all with the same brush. And it's interesting. I actually am a firm believer that you do have to define who your friends are, who your partners are, and who your business enemies are. And I don't mean that nastily. I just mean who are your real competitors that you've got to be fighting for every single day. You've got to have a true north in who fits into what category. It doesn't mean that you don't work with a broad group of people. Keep your friends close and your enemies closer is a smart thing. So you don't always have to be as public about who falls into that category, but we have to have some kind of conviction as to who falls into those categories. And so the reality is, when you look at the names you mentioned, some are direct competitors for us today. And so we have to be as competitive as we can in terms of how we serve customers and what our capabilities look like. And the reality is, FinTechs exist for the most part because banks didn't innovate fast enough. They didn't look and say, hey, we actually can do things differently for our customers that are more customer friendly. And the FinTech sat there and said, we're going to do that.
Let's talk a little bit about AI, which is a topic obviously that's impacting every industry and certainly the banking space. And as you think about Wells Fargo being an early adopter of AI and is well past the proof of concept stage, because you've deployed it now in your mobile apps and in customer engagement engines, et cetera, talk to us a little bit about how you're using AI at Wells Fargo more broadly, and where do you see AI in the future from your perspective?
And I think you characterize it really well, because people confuse AI and Gen AI and large language models and capabilities that exist today that didn't necessarily exist 2 years ago. But to your point, AI, machine learning, these are things that have been around for a while. And so when we look at credit decisioning models, when we look at marketing models, it's all a form of artificial intelligence that we've used to get to better decisions, either on behalf of customers or for ourselves. And we do a tremendous amount of work before they get implemented to make sure we understand what the output is going to be. As an institution, as a very heavily regulated institution, we're responsible for what decisions we make. So if we deny you credit, we have to have a reason to have denied you credit. We can't just say the model produced that. We actually have to have the model, but have done the work to say the model is getting to the right answer. And so if we do that, that will take time. It will get better over time, and we'll have more opportunities to either do things better for ourselves or for our customers.
An offshoot question here is around the talent that's helping you solve for that. And this is a talent now that's getting harder and harder as companies sort of battle it out for that top talent around technology. How are you approaching attracting and retaining that talent?
Listen, you're completely right on that score. And I think it's twofold, which is it's offensive and defensive. We need to, just from an offensive standpoint, the capabilities that exist in these large language models and Gen AI, which, remember, Gen AI it will create something that doesn't exist. That can be a game changer if you believe it's getting to the right conclusion. And so offensively figuring out the right places to implement those capabilities inside the company is incredibly exciting. If you're outside the company, given the amount of data that we have, the amount of use cases that we have, if we create the right working environment for people, we're a very attractive place. If we don't do that, a lot of really talented folks recognize those opportunities exist, and they're going to want to go find a place that's going to allow them to work on those things. The way I would describe what we're doing is we're being very aggressive about thinking about use cases, about doing work on use cases, but being very cautious about implementation.
And back to regulators, this is at the edge, offensive and defensively, of looking at use cases, learning what you can do. Do you have to be briefing regulators real time because this is the forefront of how technology is being used?
Listen, it's a very active conversation, both because we want to be briefing them, because we don't want to do anything that's material that they're not aware of and understand, because they're going to come in and examine it one day. And so again, this is not we don't treat our regulators like, let me say it differently, we treat them like they're insiders in that respect. And we think that's a better way to do it. At the same time, by the way, they're going through the exact same conversations themselves, which is they're thinking, hey, we know this is something which is very real. We have to be learning along the way, and we've got to be thinking about what's important to us. And so there's a very natural intersection of this desire to have those conversations. And honestly, we both want to get to the same thing, which is they recognize and we recognize that there are great use cases that will allow us to serve individuals and companies in a better, deeper way. We'll be able to serve more people than we probably can serve today. And that's things that they want us to do. But they're also going to hold us to the highest standards, which is we better make sure that we understand what it is that we're doing and what the implications of it, and that it's fair and equitable.
Charlie, going a different tact, a lot of chief executives want to make sure if they join an outside board, they can bring expertise to the board, and can they learn to bring back to their own company? You've been on the board of Microsoft quite some time. You couldn't have foreseen. How has it helped you be a better leader to be in an outside board?
It's been incredibly additive to me as a leader. And this is the second public board that I've been on. I was on the Travelers Insurance Board, Property and Casualty, when it was spun out of Citigroup, became a public company. And I'm here. Two very different companies, very different experiences. So I think, first of all, I would say more generally, and especially if you haven't worked in multiple industries or at multiple companies, it is a blessing to be able to be around a bunch of intelligent people that think about issues differently than you do. Listen, I try and get smarter. I talk to a lot of people. I read a lot of things. But that's very different than when you're sitting in a boardroom and you're talking about how to price things, how to deal with a competitor, how to deal with shareholders. And you've got a bunch of people with different experiences from different industries that are telling you how they would approach it. And so learning from other directors is incredibly additive, I think, just to me as a manager as well as a leader. And then you got the management teams themselves. And clearly at a place like Microsoft, my big fear when I joined the board, and I told Satya this, is, listen, I know what I'm going to get out of it. The question is, am I going to be able to give anything to the board? And that's more a question for you in terms of as you think about the board you're putting together. But the reality is, every meeting I go to, I always come back with a long list of things. Some are more technical, but some are just more general in terms of how they're approaching things or how they're seeing a broader set of customers approaching things. They don't talk about individual names. They often don't talk about industries, but they talk about use cases that they're seeing. They talk about the direction that they want to go because there's a set of capabilities that they know that a broader set of customers will be able to use. And it's both a combination of why aren't we thinking about that use case? Are we moving quickly enough? But also seeing a bunch of smart people think through things and how they approach these things, how they manage the company, how they think about succession planning, all those things. Just seeing a group of really, in this case, really intelligent, successful people navigate a very complicated industry, it's better than any kind of business school you could ever go to, for sure.
We talk a lot at Russell Reynolds about what we call LQ, the learning quotient, and that the greatest leaders, and then therefore the culture of the company they lead, is continuing to learn. In the old days, the CEO had all the answers at the top of the pyramid. Now in flatter organizations, encouraging people to keep learning. It doesn't matter how far you are in your career, what title you have. But again, smart people and getting outside your comfort zone, we could not agree more.
And my biggest fear, by the way, are the things that I don't know. How do you mention it's a dramatically changing industry in a dramatically changing world. And all the things that I knew that got me to this job aren't all the same things that are going to make me to be a successful leader or us be a successful company for whatever my remaining tenure I have here. How am I going to continue to get smarter, learn from others, whether it's people in the industry, whether it's research publications, whether it's academics, whether it's people in the government space. Just you have all these different opportunities to tap into a broad set of knowledge base, and you can never stop.
I think there's almost like a sustainability factor here, not in the traditional definition of sustainability. And if we can maybe just go there for a second with you, Charlie, as you sort of think about sustainability in the banking space, how are you thinking about that? How are you thinking about climate change? What are you doing to address it at Wells Fargo?
This is one of the most difficult issues that a large bank has to deal with because it's become so politicized. That's the reality of it. And so what we've tried to do in our approach to this is to be really clear, which is it's not a political issue for us. For us, there is, number one is recognition that when it comes to climate change specifically, it's a real thing. Okay. And I think we've crossed that bridge, which but 4 or 5 years ago, it wasn't clear that bridge was crossed, but I think we've crossed that bridge. And if it is a real thing, then we as an institution have to be very thoughtful about not just what our role is, but how it's going to impact us and how we can be helpful in thinking of, with all the different stakeholders we have, of understanding how our franchise has to evolve and how we as a business have to evolve to deal with that reality. And so very simply, there's some very basic things to think about, which is, right, we bank a lot of companies, we lend a lot of people money. Some of those people have business models that are going to change very dramatically. And we have to assess along the way, are they thinking about that? When our loan comes due, is their business going to be as strong as it was when we made the loan? And so we have to think about these risks that are out there. We have to think, and we've got to figure out how we embed them into the thought process of our business decisions, just the way we do any other risk and opportunity. And we're very strong believers that you can't just walk away from what powers the world, literally and figuratively powers the world today, but recognize there's a future that looks very different. One, we want to be incredibly supportive of what it takes to run the world today, but also be an important part of helping companies and governments transition to something which looks very different.
Charlie, as our listeners know, we end each podcast with some rapid fire questions to get to know you even better.
Okay.
We ask you a series of questions. You respond as quickly as you can. You ready to go?
I'm ready.
Okay.
I think.
We'll find out. Describe your leadership style in 3 words.
Open, highly ethical, and partnership.
Okay. Charlie, you've worked for and with some legendary banking leaders. If you could have worked for anyone else in your career, who would that have been and why?
That's a great question. I would love to have worked with or alongside Henry Ford or Thomas Edison, someone who created something that didn't exist. Because I think just seeing that thought process for how you start with a blank slate, and I know this a rapid fire questions, I'm sorry, but it's a different way to think.
Would you rather have regrets about actions or inactions?
Regrets about actions.
There you go.
What is something you hope to be doing in 10 years?
10 years from now, one of the things I hope to be doing is to be sitting and reading about how proud I am of how Wells Fargo is doing. That to me, and it's not just because of what I did when I was there, but for the success it continues to have after I'm gone.
What's the most significant leadership lesson you've learned?
One of the hardest lessons to learn is, for me, when you make a mistake which is very public. It's painful to admit the mistake. It's painful to stand up in front of a group of people and talk about it. You become a better manager. You become a better leader. And we all make mistakes. And anyone who thinks they don't is just not thinking clearly.
Great leadership moment. Great leadership moment.
And Charlie, last question. What's your favorite way to decompress after a long day at work?
Go home, I pick up the guitar, I focus on music, I think about how to get better.
Well, Charlie, we can't thank you enough for taking the time to be here in Redefiners. A few things we take away. I think as you reflected on the early part of your career, deciding that it wasn't the size of the institution, but who you worked with very closely, and be comfortable who you work for and leverage their experiences and talents to learn for yourself. You were lucky that you had broad experience at commercial credit and ops and marketing and finance, and taking that breadth, not trying to dive into expertise right away. And eventually, as putting your head down and ultimately being good at what you were doing, you took accountability for your own career. I love this sense of when you got to Wells, it wasn't about the vision thing. It was a view of where to go. And you had an institution full of great, committed people who just needed to be led, as well as managed, but led to make progress. As any of us goes into a new role or maybe even a new company, strengths often are stronger, but problems are often deeper. And if you have committed people like you did at Wells, don't do 90%, don't do 80%, get it done. Leverage that commitment, leverage that strength to get it done, and then you can build upon a culture of an institution, but don't declare victory. Cocky people declare victory, and that comes back to catch them. And also, evolution and change, as we've talked about, the status quo. At Visa, it was a great company, but it had to go forward. At Wells Fargo, we didn't change enough. So create space to take risk, to say we will change and we'll try something differently. And finally, what I liked a lot is you damn well better be smart about defining who your friends are, your partners are, and your competitors are, and have clarity, at least in your own mind, of who they are. So you have clarity. You have a great sense of where this 4.5 years has started and where it'll go. We wish you all the best, and thanks for taking time out today to chat with us and lessons learned.
Thanks for having me. Really appreciate it.
Thank you so much, Charlie.